afternoon, everybody, and welcome to the closing bell here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock, here to wrap up our post-Fed meeting day. The stock market ended this midweek session on a lower note. It's extended its pullback that we've seen after the Federal Open Market Committee met the FOMC. They announced they are going to raise rates a quarter of a point. That was the biggest known, right, that we've seen, and everyone telegraphed that. The S&P 500 finished down about 0.6, almost 0.7% at 2252. You saw the NASDAQ futures finishing. They actually held up the best out of all of the large cap indices, down about 0.1% at 4931.50. And you saw the Russell 2000. This is the segment of the market that took it on the chin the hardest, down 1.22% at 1357.70. You had the Dow Jones down about 0.4, almost 0.5% at 19,764, but it did just kiss that 20,000 mark. Investor participation today, it was quite heavy. 1.2 billion shares traded on the New York Stock Exchange, so we did have some decent participation. Now, obviously, the worst or best kept secret, right, whatever way you want to look at it, was the fact that most market participants were pricing in the fact that they're going to, being the Fed, move rates up for the first time since last December, a quarter of a point. Now, the accompanying dot plot, that is basically their forecast of future interest rate movements going into 2017. Well, that's where the change come into play. There was more of a hawkish stance. The sentiment right now is that there could be three moves to interest rate moves in 2017. And that bucked what the odds were for the Fed Funds futures tool. The probabilities were only pricing out the potential for two potential hikes in 2017. So obviously the Fed is seeing some more growth, some more potential inflation than what the market may be seeing or anticipating in the Fed Funds futures. But the stock market has been on a tear, so this is not something that you'd scratch your head and go, what are they thinking? Now, Fed Chair Yellen did speak after the announcement of the policy, and basically said they're going to keep an eye on, productivity. That will prompt the Fed to potentially move more aggressive to upcoming rate hikes. But there is some uncertainty with the, fiscal programs that are going to be coming out with the new administration coming into play next year. So there are some uncertainties there, and the market is reacting accordingly. Taking a look at the treasuries, they retreated in reaction. You saw that prices came down in both the 10-year, the 30-year, and the 2-year. You also saw that the U.S. dollar index popped, got to its highest level of the year, up to 102.10, up $1.04. That's up about 1% today. And, if you look at the spread between the 2-year and the 10-year, that spread basically lowered. As a matter of fact, you saw the 2 years jump 8 basis points to 1.25%. You did see the 10-year raise about 5 basis points. So the longer end of the curve is actually dragging a little bit versus the short end of the curve. Makes sense. Only up 5 basis points at 2.52%. Now, the 30-year ended the day at about 3.14%, increase of 1 basis point on the 30-year. We did see that all 11 offensive sectors that I watch were in negative territory, and the rate-sensitive groups led the retreat. Real estate really took it on the chin, down 1.9%, and utilities down 2%. They settled near the bottom on the board today. Consumer staples down 1%. You also had telecom services down 1%. Now those losses are slimmer comparative to the other two sectors, but still showing that those are the weak sectors, and those are the sectors most sensitive to interest rate increases. The healthcare sector was on the uptick on the downtick at 0.4%, and it really wasn't helped by the performance in the biotech. The biotech did bounce today. We saw that the IBB was up about 0.3%. There is concern about two things. One is obviously what are futures pricing pressures going to be, and the second thing is that the Department of Justice did announce that there are going to be some criminal components that are going to be coming out on price fixing against certain names. Those names haven't been noted, nor have the individuals that are going to be implicated or in those particular price fixing schemes. So the most of the cyclical sectors, as I'm looking at the board, struggled. Technology and financials were the most notable. Technology as a whole down about 0.3%. Financials down about 0.6%, but they couldn't take that early strength that they had and build off of that. Again, the financial sector will benefit down the road from the rate increases, and we saw that after the announcement, but there was some profit taking from its December high. So again, we'll see that with the financial sector right now for the month up about 4.2%, and telecom services, another segment that's up about 4.8% month to date. You might see some profit taking coming into the year end. One other sector that was down was energy. Energy was down about 2.1%, and you saw that crude, West Texas, the crude contract finished down about 3.7% at 51.03. Now, we did see a bearish API report yesterday, American Petroleum Institute, but we did see a Department of Energy come out and the EIA, the Energy Information Administration, come out and report that there was a larger draw on the crude markets. As a matter of fact, there was like 2.6 million barrels that was drawn from supply week over week. Now, that would seem like it's bullish, but the market could not sustain itself or hold up in the crude markets. Again, I think that there's going to be a larger geo play here where demand may not be increasing. I think there's some uncertainty about Europe and Asia, but we're going to keep an eye on that. Tomorrow's going to be very busy on an economic front. Watch the initial claims that's going to be out, as well as the November CPI, the Consumer Price Index. Watch for an uptick there. That could be another inflation beating drum, and that would, again, get the Fed acting a little bit more hawkishly going into 2017, but we'll have to wait and see. Those are out at 10 Eastern Time. Join us tomorrow, 8:30 a.m. Eastern Time. We will be doing all the overnight action review, and we will be checking out what's going on in the pre-markets here in the States. So until then, have a wonderful evening, and thank you for watching MarketStream.live. Take care.